Good afternoon. Getting right down to business here. We are doing it live and doing more at 4 weekday afternoons, right after Guy Benson now at 3, and all this just before the 790 KBC News Blitz with Randy Wang at 5. And stay tuned tonight at 6 for the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be on again tonight at 6. In fact, every Thursday night with Mark Hood, the CEO of the Union Rescue Mission, the #1 organization helping the homeless here in Los Angeles. Tonight, our special guest, the Honorable Catherine Barger, Chair of the Supervisors of Los Angeles County. She'll be joining us at 6 o'clock this evening, along with the President of the Union Rescue Mission, Richard Baker. Be sure to tune in to the Just Help One radio show Thursday evenings at 6 right here on 790 KABC. Right now, it's Mottek On Money, live on the air, streaming live online worldwide at KBC.com, and your on-demand Mottek On Money podcast at KBC.com. Apple, iTunes, YouTube, all of your favorite podcast platforms. Well, after several days of triple-digit moves this week, both up and down, stocks ended slightly lower today with the S&P 500 and NASDAQ continuing the sell-off, which landed those two averages in correction territory last week. We did get the comments from Fed Chair Jerome Powell yesterday, which had the Dow in a happier mood yesterday. We saw a triple-digit gain. Today, the Dow pulling back 11 points at the closing bell, back to 41,953. The S&P 500 gave back 12 points, and the NASDAQ slipping 59. We did get that well-fed rally yesterday with the Fed Chairman Jerome Powell, you may recall, in the spotlight, and with the Fed holding steady on short-term interest rates, but signaling they would cut interest rates 2 times this year. In reaction, we did see the yield in the 10-year note slipping a bit today, it looks like, back to 4.23%. That's the one that impacts the fixed-rate mortgage rates, which have actually ticked higher for the second week in a row, according to the latest survey out today from mortgage giant Freddie Mac. Also, home sales getting a boost last month as rates came down earlier this year, according to another report out this morning. We'll get an update on real estate and mortgage rates from Jeff Lazarson, the president of MortgageGrader.com, an Orange County Register real estate columnist. He'll be joining me live later this hour. We'll also get an update on the Los Angeles business scene, big time, from David ENGLIN, the president of the Los Angeles Business Federation. David ENGLIN, the LA BizFed president. The Business Federation, by the way, is made of about 240 business organizations here in Los Angeles, representing 420,000 employers with 5 million employees across Southern California. They're about to recognize the biggest supporters of business in Los Angeles at this critical time for the region with the firestorm recovery and rebuilding effort in focus. David ENGLIN, president of BizFed, will be joining me live later this hour. But first, on your money, the markets, the economy, gold continuing to rise, crypto, the whole works now. Joining us live is Bryan Perry, senior editor at Eagle Financial Publications, author of the 25% Cash Machine, financial advisor with decades of experience working for major Wall Street firms, and currently chief investment strategist and portfolio manager for a New York money manager. Bryan Perry, thank you very much for taking the call here this afternoon.
Always good to be with you, Frank. Thanks for having me. We had a week here that got off to a pretty good start here with Powell trying to assuage the markets here with they're operating in the fog. They're basically, the Fed's driving 55 miles an hour in the fog here, and they're with no really clear answers as to about the economic outlook. So this is an issue with the market, even though he still talked about how the soft data is definitely apparent, but the hard data still hasn't shown any really weakness that he can see of. In fact, we had existing home sales and building permits and new home sales here this week come out better than expected. So that runs counter to the surveys, the consumer surveys, which have been quite weak. Although we've had a lot of soft guidance by retailers and certain restaurant chains, and we had Delta come out last week and talk about how things were softening. They weren't going negative, but they were just slowing. So we're hitting a slower growth period right now for the economy and for the market, and that's really where you're getting this price multiple contraction here with most stocks out there. So that being said, large firms that were leveraged coming into the year, post-Trump 2.0, they continue to deleverage, as are retail investors that were just carrying too much margin on the books. So even though Fed Chair Powell tried to thread the needle, he kind of did a pretty good job of that. But at the same time, the market doesn't trust a lot of happy talk right now. It's really, the market is in a very defensive mode. We did see bonds, as you noted, moved lower here from 4.3 to 4.23 today. The recent low was 4.1, so that's interesting to see the bond market supporting what is out there. AAI survey came out here last week. It's near the historic highs here for the bearishness, and that's usually a counterintuitive indicator here. So maybe we're starting to get between now and April 2nd, when these tariffs come on, we get maybe some deals cut, or we get extension on certain other types of things. But the market is really operating in a guarded mode here, Frank, at this time.
Interesting. Yeah, FedEx, I don't know if you saw the latest news here this afternoon. FedEx cutting its profit outlook for a third straight quarter, saying it reflected continued weakness and uncertainty, there's that word again, in the U.S. industrial economy, hitting demand for its business-to-business services. What about that news here? And FedEx, the latest company to sound the alarm on the economy. That's the headline coming across the wires this afternoon.
Yeah, certainly logistics companies are going to be the ones that are going to be very sensitive to tariffs here. And so I think that they're getting in front of this news that's about to hit, and also the fact that, you have in general, global economies are not moving that, they've been lowering interest rates here, and there's been a general global economic contraction. Europe has made some strides recently, and China continues to try to stimulate. But in general, there is a pulling back and really it's with the U.S., because when we turn off the spigot of stimulus, then the whole world feels it. And that's kind of what I think a lot of people are trying to guide their forecast in that manner, because, the punch bowl has been pulled from Washington, and that's going to start to affect a lot of different types of businesses that depend on Washington for a lot of those handouts. Ideally, we're going to see the economy, which is going to cruise along maybe at 1.5% to 2%, and interest rates will still be in the low 4% range, maybe get into the threes, and then you still have inflation here, which is under 3%. So we're kind of normalizing, Frank, and the market's having a hard time adjusting for that, because it's, we're going through this quote detox period. But in general, the market is starting to price that in, and when we get some clarity on tariffs, then I think you're already starting to see some bargain hunting here in big cap tech, because after the close we had Micron come out here and give very strong numbers and good guidance. So you got good capital spending here at the big cap tech level here, because the race for AI is on. But at the retail side, the consumer is starting to there's a caution flag out.
Do you think the Fed will, in fact, lower rates twice this year, as was signaled yesterday when what we got from the Fed announcements, including the comments from Fed Chairman Jerome Powell? And I believe the word transitory came up again. I think somebody indicated that inflation would be transitory because of the tariffs. Is that going to be the case this time?
Well, we can only hope so. We've got, and he used that word that I thought we had disposed of that word back in the last round.
Yeah. There it is again.
But so it came right back up. There will be maybe a bump in prices for the next 2 or 3 months here. There's actually been a lot of hoarding going on in front of all this by a lot of retailers and industries and all that, buying in front of all this. You got Walmart and Costco also negotiated with China to lower prices to help adjust for future tariffs here, another 10% on top of what already is. So there's a lot going on behind the curtain here in terms of trying to adjust for tariffs. And I think that's making its way into the market here, but at the same time, it doesn't really help to not know, what the impact is. No one really knows what the impact is. So the dirty word is stagflation out there, and it's whether the Fed is going to be able to manage that well, where they maintain a strong labor market and still be able to manage inflation. And right now, labor markets are showing, pretty decent. It's lower hiring but lower firing also. So that's kind of what's going on there as well, outside of government. And government workers are going to have to find their way into the private sector. That's just it is what it is. So I think that we're kind of in this no man's land for the moment here. But the fact that we're seeing some decent numbers come out of technology and not cut back their capital spending numbers, Frank, I think is a good sign for coming out the other side of this on the right side of things.
And you mentioned the companies buying in front of this, and it appears to be some appear to be raising prices ahead of this as well, putting already upward pressure on inflation. That may be one explanation here, along with the uncertainty over tariffs, while we're seeing gold continuing to rally here. Gold at around 3,052 here at the moment. What are your impressions of this tremendous bull run for gold, and what do you see ahead for gold here?
Well, that's a reflection of the sharp drop in the dollar recently. The DXY, which is the basket of currencies that trade against the dollar, That was trading at 110 here just 2 months ago, and today it's trading at 104. A 6% move down in the dollar index it's a big move.
Expert entrepreneur Ed Milet is on a mission to max out your life.
So many of you have dreams in your life and you don't go touch them. You've got to begin to touch your dreams.
It's time to get laser focused on peak performance.
I'm going to give you very unique habits that I do on a daily basis. Say no more. Have deadlines in your life. Go to work.
And become the best version of you.
Take a day and serve that mission.
The Ed Milet Show.
Max out.
Follow and listen on your favorite platform.
And so gold is moving certainly up against that, because when your currency weakens, then gold becomes more precious. And that's what's happened there. Conversely, we haven't seen the same move in cryptos or Bitcoin. This has really been a gold rally, and I think a lot of it's certainly by central bank buying of gold out there. They're the biggest buyers of gold in this open market right now. And gold broke 3,000, went through like a hot knife through butter. And so next move looks like 3,050-ish in that range there, and maybe 3,100 over the near term. And so that's a breakout. And I think that's really until the dollar shows that it's going to find some stability down here at this level, then gold's going to remain elevated at these prices, and silver as well.
Yeah, let's take a look at silver. It popped above 34 an ounce, just below 34 an ounce here at the moment. And what about the cryptos? I know you follow the action there. Bitcoin hovering above 84,000 here at last check. Ethereum still below 2,000, and Doge at the moment at 17 cents.
Yeah, we're seeing a dislocation there, obviously because there's a lot of speculation of buying into Bitcoin, like as there is into buying meme stocks and names like the Palantirs of the world and the Coinbases and a lot of the hot names in the stock market. So that same kind of money runs around, piggybacking these momentum stories. And so Bitcoin is a more of a momentum story than it is at this point in time a safe haven or a hedge against inflation. So that's become a risk-off trade short term. I think down here in the low 80,000 level here, it seems like it's chopping around here and looking like it's there's some accumulation going on now. So that may be where we find a base in here. Whereas Ethereum is really that's down almost 50% from what it was trading here just a month and a half ago, and the rest of the altcoins are down somewhat even more so. So it's still Bitcoin's story long term, and I've seen that MicroStrategy and Michael Saylor are buying more of it down here. He's always seems to be the smartest guy in the room when it comes to this trade. So it's one that to continue to look at here, but obviously when the Nasdaq pulled back 15% here ish, then you also saw a lot of money come out of the cryptos and Bitcoin. There seems to be more of a correlation there as opposed to just being a storehouse of wealth there, Frank.
All right, and then the AI trade. Let's talk about the Mag 7 here. NVIDIA, let's see, 118 and change. Tesla has been taking hits, moving up only slightly today of 40 cents to 236 and change. Apple down $1.14 at 214.10. Give us your impressions here of those names and the rest of the Mag 7 or the Mag 8 if you include Palantir.
Sure. Well, NVIDIA just wrapping up their GPT conference here in San Jose. Jensen Huang, he outlined there's going to be $1 trillion worth of build-out for AI build-out between now and 2028. That's just an enormous number, but the market didn't react well to it. I think there's still this hangover from DeepSeek and other types of open source risk out there, Frank, that the market just isn't sure about. And that's got everybody kind of wondering whether or not they're on the right side of this trade, because there was not that threat there 6 months ago. And now there just seems to be these open question marks about all of this. And also the application, the use cases for AI and how that's all going to get monetized going forward here after all this spending. And I think a lot of the investing world doesn't understand the application and the monetization of AI once it's installed. So I think that's still more of an open question mark for a lot of people, because NVIDIA should have rallied more than it did post this conference here, as it did in the last conference. And I think that those numbers will show up in their earnings here, but there's a a lack of trust in the whole AI trade going on right now, because you're seeing selling into most rallies here within these AI stocks when they have a good day. So it's either people are just repositioning and lightening up their weightings. Maybe they're overweighted, and because there were a lot of people that were just way overweighted in this trade, and it's trying to balance things out here so that because there are other parts of the market that are performing better in more of the defensive sectors, that they probably just want to basically even out their portfolios.
All right, Brian Perry, at this point, let me ask you the big question here at this critical moment. Any specific places where you are putting money now and or taking it off the table?
Well, speaking of evening out portfolios, if we are in a slowing period here, slower growth but still slowing, then take a look at some of the things here that are somewhat tariff resistant, if not tariff proof, that are domestic companies here in defensive businesses that are paying decent dividends here. We've seen utilities bode very well here, and I've been for managed accounts and for I've been picking up some new next year energy, which is Florida's largest power utility. I think that sits well here. LabCorp, symbol LH, which is the nation's largest place where you send off your labs, for all medical purposes here. Abbott Labs, ABT, is a fine biopharmaceutical company here. They've come up with a diabetes test that doesn't require an insulin test that doesn't require a doctor's prescription. And that's going to become just, I think, a home run for the particular company. Lincoln National, too, LNC, property, casualty, and life insurance company, pays a really nice dividend of over 5%. Strong earnings growth here. It trades at a PE of about 10 times earnings. And Uber looks like after that pullback from 80 to 70, it's back up here to 74 and change. The self-driving, robo-taxis and all that is the wave of the future. They have a very strong CEO here who used to run Expedia, and the company's just hitting on all metrics right now. So I like Uber there as well. Lastly, for one of my newsletter services, I recommended Walmart here. It's pulled back from 105 to 85 and hitting just off its 200-day moving average here. They did lower guidance for the first quarter here, but this is a company here that tends to, gain much more volume as the economy does slow, and people are just that much more price conscious. Coming off real quick, Frank, I took a trade on Berkshire Hathaway for one of my trading newsletters here. It ran up, very sharply here recently here, and also DocuSign had a nice earnings pop, and I took that trade as well. So I'm just taking profits where I can in this kind of a market, because right now the trend hasn't been our friend, and you just have to capture profits where you can.
Terrific, Brian. Well, thank you very much for covering all the bases here, as always. That is Brian Perry, Senior Editor at Eagle Financial Publications, author of the 25% Cash Machine, financial advisor with decades of experience working for major Wall Street firms, and currently chief investment strategist and portfolio manager for a New York money manager. His website, by the way, is brianperryinvesting.com. Longtime contributor to this program. Brian, always great to have you with us. Thank you very much for joining us live here this afternoon.
Always a pleasure, Frank. Thank you. Have a great day.
Thank you very much. Out to the freeways we go now on 790 KBC.
She's the kind of girl who's not too shy, and I can tell I'm her kind of guy.
790 KBC welcomes Herman's Hermits, starring Peter Noon, coming to the Canyon in Agoura Hills, April 4th. Tickets are on sale now at AXS.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you are caller number 9 right now. 1-888-795-2222. The tickets furnished by the Canyon, where music meets the soul. Bit of a pullback today for stocks after that one-day rally we saw following the Fed decision to hold the line on short-term interest rates and signaling 2 rates ahead this year, possibly. The Dow coming in for a closing loss of 11 points. S&P 500 down 12 and the NASDAQ down 59. The yield in the 10-year note easing to 4.23%. Price of gold continues on a roll at more than $8 now at $3,052 and change. Silver is back below $34 an ounce, now down 3 cents at $33.75. The price of oil higher of $1.14 at $68.30 a barrel. The volatility index, the VIX index, the Wall Street so-called fear index, down 0.5% today. Bitcoin at the moment down about 100 at just above 84,000. Ethereum down 2 at 1,976, and Doge at the moment at 17 cents. Checking Tesla shares of 40 cents at 236 and change at the close. Nvidia up $1.01 at 118.53, and Apple pulling back $1.14 at 214.10. The dollar slipping overseas right now against the euro. We're at $1.08, 148 against the Japanese yen, and 129 versus the British pound sterling. Taking a look at some of the news on the economy today, we did get the Conference Board's index of leading economic indicators with weakening manufacturing orders and gloomier consumer expectations casting the darkest shadows on the economic outlook in the months ahead. The leading economic index continues to point to headwinds ahead, according to the Conference Board senior manager for business cycle indicators. Although the index shows the drag on growth has eased during the past year, the Conference Board now forecasts the expansion will slow this year to 2% from 2.8%. That was in the previous year, and they said flagging substantial policy uncertainty and the notable pullback in consumer sentiment and spending this year. And the Federal Reserve yesterday downgraded its forecast for economic growth this year to 1.7% from 2.1% in December, with policymakers noting that uncertainty around the economic outlook has increased. There's that word, uncertainty, once again. Now the latest news here on 790 KABC. Mottek On Money continues here, 790 KABC. Good afternoon. Uncertain times for businesses, the Main Street economy, and for Wall Street in the face of the tariffs back and forth and what the Treasury Secretary Bessent recently called a detox for the U.S. economy, and President Trump not ruling out a recession. The Fed Chairman, Jerome Powell, had some reassuring words in a statement at a news conference yesterday, saying the economy is strong overall and labor market conditions are solid, but policy changes will matter for the economy. Let's get an update on what's happening here on the Los Angeles business scene. David ENGLIN joins us live now, the president of LA BizFed, the Los Angeles Business Federation. LA BizFed, the voice of business here in Los Angeles, which is made up of about 240 business organizations in LA, representing 420,000 employers with 5 million employees all across Southern California. They're about to recognize the biggest supporters of business in Los Angeles at a critical time here with the firestorm recovery and rebuilding efforts very much in focus. David ENGLIN, thank you very much for taking the call here this afternoon.
Thanks for having me on, Frank. It's always good to be with you.
Wonderful to have you with us, and looking forward to seeing you tomorrow at the Busy Awards. It's going to be a big celebration there. But first, among the movers and shakers you're talking to here, given all that's going on, give us your view of what's happening on the business scene here.
Well, as always, taxes and fees and regulations are a challenge for businesses in the LA area, and that certainly is driven into sharp relief by the challenges of recovering from the fires. You know, we have businesses still trying to recover from COVID, and you know, the impact of these historic firestorms that have devastated our communities have devastated businesses, particularly small businesses. And so in addition to all of the challenges around rebuilding homes and rebuilding our communities, you have small businesses there were certainly lots of small businesses that were directly impacted by the fires, burned down or you know, impacted in that kind of way. But then you've got businesses in the adjacent areas that have lost their customer base, and there right now isn't a lot of help for those folks. So BizFed, of course, our sweet spot is policy advocacy and mobilizing our massive diverse membership to try and have an influence on elected officials and policymakers. And so we're working with a lot of those policymakers to try and have a positive impact on the small business recovery front in particular. But of course, you know, we've got to clear the way for rebuilding homes. That involves clearing the way in terms of regulations and the approval process. It's so hard to build anything in California and in Los Angeles in particular that it's just a Herculean task to deal with some of the bureaucracy and red tape. So we appreciate any policymakers and elected officials who stand with us in that area.
Michael Rosenbaum and his Small Bill co-stars take you behind the scenes of one of the greatest shows of all time.
We're going to watch every episode.
Join us. It's Big Talk.
You remember when I had to shave my head?
Oh, I think I was angry with this one.
On Smallville.
Yeah, I mean, I get it.
The scene you did, and this is the one that got me fired.
Okay.
What? Here we go.
I love the excursions with me and Welling.
It's everything that Superman stands for. It's Talkville.
Talkville, we always talk about it. It's a great thing.
The Smallville Rewatch Podcast. Follow and listen on your favorite platform.
On there live with David ENGLIN, the president of the Los Angeles Business Federation, LA BizFed, and having had your founding president, Tracy Hernandez, on this program right after the firestorms. She gave us an update on the resources that were immediately available for businesses, which you helped organize. Any updates on that front, and anything you'd like to bring to our attention here now, to the business community's attention here now on what's available following these this horrific disaster?
Well, the good news is that the county, the city, and local philanthropy have put together some funds that can help a good number of the businesses that are impacted. The challenge with those funds is they're really limited at this point to the businesses that are directly impacted, the ones that were directly in the fire zones, or they've expanded the eligibility to include if you were in an evacuation zone. So maybe your business didn't burn down, but you had to be evacuated. So that's great, and that's positive. And people can apply for those sources of aid. We're trying to create tools to increase eligibility so that some of those adjacent businesses can get help too. But there are programs available. You can go to togetherforla.org is a central clearinghouse for small business resources. That's a great place to look if you're looking for these programs to get aid. That's also a good resource to get connected with the Small Business Administration programs and some of the FEMA programs as well that can help those businesses trying to come back from the fires.
On the air live with David ENGLIN, the president of the Los Angeles Business Federation, LA BizFed. I know every year you honor political leaders as well as businesses who have gone above and beyond to promote business here in the Los Angeles region. I know you had Supervisor Barger there as an honoree. She's going to be on the Just Help One program tonight here on 790 KABC at 6 p.m. And you're set to honor others who are considered business-friendly, right? Are you able to tell us who's going to be picking up the Busy Awards tomorrow at that sold-out event tomorrow?
We sure are, Frank, and I'm excited that you're going to be there to help us present some of these awards. Some of the elected officials that you mentioned that we're honoring, LA City Council Member Tracy Park, Pasadena City Council Member Tyrone Hampton, Assembly Member Tina McKinner, Monterey Park City Council Member Thomas Wong, Assembly Member Rick Chavez-Zabur, and in fact, Governor Gavin Newsom is getting an award for his work on Prop 1. Prop 1 is one of those big achievements that we're proud of last year. Interestingly, Prop 1 is really focused on tools to address the homelessness crisis. And for the last couple of years, when we do our annual survey of business leaders in the LA area, homelessness is a top 5 concern. In fact, this year, we just got the results back, and it's the number 3 concern. We closed out our survey last week, and homelessness is the number 3 concern among business leaders in the Los Angeles area. So Prop 1 is something that we worked on, and Governor Newsom was a leader and partner in that, so we're giving him an award for that work. So it's a pretty wide-ranging group of elected officials, and then, of course, we have our Advocate of the Year, Matt Klink from California Strategies, who we're honoring, and we have our Mayor Richard Reardon Legacy Award going to Billy Greer. And if you know Billy, she is a phenomenal, long-standing business leader in the LA region. She's done so many things and been such a powerhouse. So we're excited to give her our Mayor Richard Reardon Legacy Award.
That is really wonderful. On the air live with David ENGLIN, the president of the LA BizFed, Los Angeles Business Federation. See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KABC. And thanks for sharing the results of that important business survey. If you don't mind taking it from the top and tell us about the results of the survey, which people are hearing here for the first time.
Absolutely, yeah. These are preliminary results, so this is hot off the press, Frank. I can tell you the top 5 business concerns for 2025 are, number 1, taxes and fees, number 2, government regulation and compliance, number 3, homelessness, number 4, inflation, and number 5, crime. Those are the top 5 concerns of business leaders in the LA region. And these are real credible results because we had a near historic participation in our poll this year. 100% of BizFed member associations are represented in the poll results. And we exceeded our expectations in terms of the actual response rate. So these are strong results, and we'll have more analysis over the next week or two, and I'd love to come back on and share some more insights that we glean from the poll as we dig deeper into those results.
That's wonderful. Well, let's do that for sure. And remember when BizFed was first founded by Chairman David Fleming, we used to talk to David Fleming about those important surveys for many years, and we send our love to David Fleming as well and your entire BizFed team there. And looking forward to celebrating business with you there tomorrow. David ENGLIN, the president of the Los Angeles Business Federation, LA BizFed, which is the largest business organization here in Southern California, about to recognize the biggest supporters of business at the Busy Awards tomorrow. Thank you very much, David, for taking the call here this afternoon, and we look forward to many more conversations here.
Thanks a lot, Frank, and I'll see you tomorrow at the Busies.
Wonderful. It's going to be a busy day, as we say there. And right now, out to the freeways we go, 790 KABC. Mottek On Money continues here, 790 KABC. Home affordability and availability continue to be big issues here in Southern California. Mortgage rates have ticked higher for the second week in a row. Home sales did get a boost last month as rates came down earlier this year. Let's get a laser focus now on all this with Jeff Lazerson, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff Lazerson, great to have you with us here this afternoon.
Thanks, Frank. Why don't we start off with rates? So today, Freddie Mac ticked up a little bit to 6.67%. Now, locally, you can get a 30-year fix at 6 1/8% at one point, and a 15-year fix at 5 1/4% at one point. That's up to 806,500. The high balance loan goes from 806,501 to 1,209,750. The 30 years at 6.5%, and the 15 years at 5 3/4%. Jumbo rates over that are 6 3/8%, and we're seeing a lot of debt consolidation lending now. So a lot of equity lines and seconds, and those rates are prime plus something. Prime's at 7.5 right now.
On the air live with Jeff Lazerson. Where do you see the rates go from here?
Oh, they're coming down, Frank. Look all this economic news. Everyone's talking about the tariffs, and it's really scaring people from making decisions and doing things. Big companies are. So maybe it's inflationary, but I don't think so. I think it's just scaring people. When you look at the consumer confidence, the Michigan survey in March plunged to 57.9, and I think it was 64.7 in February. Retail sales in February were 0.2% higher, and I think they were expected to be 0.7. And then even the Fed said the economic growth was down. So I say rates are coming down, and you'll see them in the 5s probably, I'm going to say, in the next 30 days or so, something like that. So you should see a big pickup in sales, because 6% or under 6 is this magic number where more people are going to jump in and start buying again.
Are people jumping in and buying again now? You described yourself as the Maytag repairman. Certainly in recent years, has business picked up now?
Yeah, it's a little bit better. I mean, it's not great, but it's a little bit better than it had been. There's a lot of demand out there, and there's a lot of bidding wars on the well-priced properties. I would say my average buyer has to make 5 bids before they are able to, close a deal or catch a deal type of thing. So it's still very competitive if it's priced well. You got to have a really aggressive real estate agent who knows what they're doing and knows how to present things, and hopefully that way you'll be able to get in.
All right. What about the impact of this fire disaster here with an area larger than Manhattan burned down in the Palisades, for example? hearing reports that prices have gone up dramatically in the Palisades. What impact are you seeing following this disaster here?
Well, it's demand, right? I mean, how many homes were lost? I don't know, thousands, right? And so there's only X amount of homes on the market. And by the way, on the market in general, the market is opening up. Inventory levels are getting better. More properties on the market, and it's not just up in the Palisades area; it's all over. So that's actually a better sign for people too, because there's more choices. And the folks in the Palisades that have to do something, there may be a little more opportunity, even though prices are going up. But it's also because of that community up there. It's Redondo Beach, Hermosa Beach, Palisades. I mean, it's that's just beautiful country up there.
Right, and a massive recovery and rebuilding effort, slowly but surely getting underway. Regarding home prices, based on what we saw from the Case-Shiller Index, still pretty much at or near record highs. What do you see ahead for the prices?
Well, the affordability is just it's really a killer, and so the prices. Bottom line, our prices are going to keep going up, and they're probably going to get goosed and go up even more as the rates come down, because people think they have more affordability as a lower rate because you have more buying power or more borrowing power. But of course, what it does is it stimulates prices. So even though prices are going up, still going up, they're going to go up a lot more once these rates come under 6%, and the bidding wars will get worse. And there may be more people that willing to move up. I think there was a lot of holdback over the years. If people were sitting on 2 or 3% interest rates, it's like, why do I want to go to 6 or 7% interest rate? But people have to get on with their lives, and they have growing families and this and that. So I think that you'll see more people just saying, you know what, I'm gonna let my 3% interest rate go because I got to move my family into something bigger.
On the live with Jeff Lazerson, president of MortgageGrader.com and OC Register columnist. You want to give us a tip on what you're going to be writing about this weekend, Jeff?
Oh yeah, it blew up pretty nicely today. It actually went electronically online today, and it gets printed in the Sunday paper. But it's about the Fannie Mae blacklist on condos. So Fannie and Freddie have this financial and operational stability standard with condo complexes. And if you cannot get Fannie or Freddie pricing, the conventional pricing, you either can't buy it if you need financing, or you have to pay high rates. It's called a non-warrantable condo rate. And so blacklisted in LA County, there's 237 condo complexes blacklisted where you can't get the financing there. In Southern California, all the 5 counties that I talk about, there's 438 blacklisted statewide.
We'll be looking for that article in the OC Register, as well as the Southern California News Group websites and papers. Jeff, thank you very much for joining us live here. That is Jeff Lazerson, the president of MortgageGrader.com, also OC Register real estate columnist, joining us live here. Stay tuned now for the 790 KBC News Blitz at 5, and then at 6, it's the Just Help One radio show and podcast presented by the Union Rescue Mission. Stay tuned, 790 KBC.
No Contest Wrestling, where O'Shea Jackson Jr. and TJ Jefferson bring their hot takes with the biggest names in the game.
Ladies and gentlemen, Braun Breaker. Welcome to the pod.
My aspirations in life, I always wanted to be a WWE superstar.
The Prodigy, Roxanne Perez. I got to talk about the Hugger cosplay.
I mean, it was perfect, wasn't it? You know?
LA Knight.
What am I doing here? At this point, I can retire. See you, everybody.
The No Contest Wrestling Podcast, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.